Your debt is quietly eating your future, and most people have absolutely no idea how much it's actually costing them. We're talking about a country where the average household carries over $100,000 in total debt, and yet almost nobody has a real plan to fight back. The first thing you need to understand is that not all debt is created equal. And the enemy isn't the balance, it's the interest rate silently compounding against you every single month. Think of high interest debt like a leak in your boat. You can keep bailing water, or you can just plug the hole. The lowest risk move you can make right now is picking up the phone and calling your creditors to negotiate a lower rate. And yes, it really is that simple and that awkward. Studies show that over 60% of cardholders who ask for a rate reduction actually get one, which means the other 40% just never asked. Balanced transfer cards with 0% introductory periods are one of the most underrated tools in personal finance, essentially letting you freeze the interest clock for 12 to 21 months. The catch is, you need a plan to actually pay down the principal during that window. Otherwise, you're just rearranging deck chairs on the Titanic. Debt consolidation loans get a bad reputation, mostly because people treat them like a finish line instead of a reset button. If you can roll multiple high-rate balances into a single lower-rate personal loan, you've just bought yourself both breathing room and clarity. Refinancing your mortgage, even in a higher rate environment, can still make sense depending on when you originally locked in. And a lot of homeowners are sitting on equity they haven't thought strategically about in years. This isn't about pulling cash out recklessly. It's about restructuring the largest line item in your budget with fresh eyes. Here's where people get it wrong. They assume the lowest monthly payment is the same thing as the lowest risk strategy, when really, a stretched out loan term can cost you tens of thousands more over time. The goal is lower interest burden, not just a smaller number on your statement this month. Income-driven repayment plans for federal student loans are genuinely one of the most underused tools available right now, capping your payments at a percentage of your discretionary income. If you've been white-knuckling a standard repayment schedule, you may be voluntarily paying more than the government actually requires. The psychological trap most people fall into is the "I'll deal with it later" mindset, which is basically handing your future self a bill with compound interest attached. Every month you delay a refinance, a negotiation, or a consolidation is a month that interest is silently winning. Community credit unions are often the unsung heroes of low-risk debt restructuring, frequently offering personal loans and refinancing options at rates that big banks simply won't match. If your financial strategy has only ever involved the 4 major banks, you've probably been leaving money on the table for years. The misconception that debt restructuring hurts your credit score is one of the most damaging myths out there, because in many cases, a consolidation loan actually improves your utilization ratio almost immediately. What truly damages credit is avoidance, missed payments, defaults, and accounts sent to collections. The historical lesson from every economic cycle is that the people who restructure proactively during uncertainty always come out better than those who wait for a crisis to force their hand. Discipline here means making a boring, unemotional spreadsheet decision instead of an emotionally charged one. Size your moves appropriately. Don't drain your emergency fund to pay down debt, and don't take on new complexity just to chase a slightly better rate. The best debt strategy is the one you can actually stick to for the next 24 months without having to reinvent it. At the end of the day, reducing your debt burden is less about finding a magic product and more about building a quiet, consistent system that works in the background of your life. The people winning financially aren't doing anything exotic, they're just making the same boring right decisions repeatedly, without drama. Whatever your situation looks like right now, the point isn't perfection, it's progress. And one restructured payment or one negotiated rate is already a different financial trajectory than yesterday. And if you want help taking that first step through real estate investing, home contracting, or finding the right lenders, check out our links in the description below.